Good afternoon, Scott Redler, Chief Strategic Officer of T3 Live. Welcome to today's recap. It's the first day of the week, first time we've been able to trade since the Jobs Friday report with all the craziness all weekend long. Well, with all said and done, I think it was a pretty quiet tape, a tape that was somewhat forgiving. As a trader, what you try and do is you try and do the right thing. You try and trade strong stocks, strong groups. You stay with them until the complexion changes. If a strong stock goes out strong on the highs, and that's the one you take on a down day, that's what you look at because these are the first ones that typically can go positive. And today we came in with some people saying we're going to go to hell. Sorry for the bad word. And some saying that today is going to be the low of this retracement and we're going to continue higher. But as an actual trader, you really don't know what to expect. You can only have levels in front of you and a set of rules. So to me, my thesis was, from 1421 down to almost a 50-day moving average, it would probably be better to cover your shorts into this area, look for some cute longs in the strongest stocks, the best sectors, and take the trade, take the cash flow and use a tier system to book some and stay with some, or book some, trim some. I say trim some, hold some, or whatever you guys like what I say. The bottom line is that's the way to do it. So I'm going to quickly do a run through so you can see what I mean, how to act, and what we should be looking for tomorrow. So as far as the S&P is concerned, we've been going over this chart so many times. This was the week that IBD put us back in a rally under pressure. So this was an area to start to loosen up a little bit on some longs because you weren't sure what was going to happen. This is when we broke below this accelerated momentum uptrend, but we didn't quite close below it until finally on Wednesday. That's what happened. You had another distribution day, like the 5th within a month or so, something like that, and that's when we went into market correction, and that's when the composure somewhat changed. Okay, fast forward to today. Okay, we opened below this recent floor, and we held the bottom of 1378. So the zone I was talking about really was this prior breakout, which was right around here. Okay, into the 50-day moving average. So we didn't quite get as low as the 50-day, which I thought would be viable for the S&P or the spiders, but 138 on the spiders was my level to cover, so I could be situated to buy the 50-day. So if you look here on the spiders, you will see, we went as low as, what's this low here? This low is 137.84 before, rallying back up. And, but for me, I didn't go long the spiders. I actually went long the strong stocks that I've been looking at. So we did close at 138.22. I think, if the bears have any control, okay, or the sellers have control, they're not going to let this area be close. They're not going to let us close back above this. And if that's the case, then I think we test, the 50-day moving average, which will be moving up, and then obviously the bigger zone comes into here. But obviously there's a lot of trading between here, and you just have to act accordingly because a lot of guys, you have to have a plan, and you have to also have your entries and exits. If you're thinking we're going to 1340 in the S&P and you came in and said I'm just selling everything on the open, chances are you might not have held in what was a decent move in the indices and obviously some of the leading stocks because we came off those lows until a little bit late in the day. So you still have to have the right entries and know where we came from and know that the McClellan oscillator was down like -81. That's very, very oversold. It's hard to short anything when that vehicle is right there or that oscillator is right there. So I think we closed down 70, but not as drastically oversold, but still we might need some time to work off the move from 1420 to almost 1380 or below before we continue, and then we have to monitor the winners. So with that said, a lot of guys didn't know what the jobs number would have. None of us do, obviously. We don't know what's going on in that secret envelope. But if you went out long some of the strong stocks on Thursday for maybe what could have been a good number on Friday, all you can ask for is a way out. As a trader, you need to be able to salvage the trade and step aside, or maybe the trade continues and surprises you like we saw in certain stocks. Okay, if you could think off the top of your head, what were the strong stocks from Thursday? Stocks that were candidates to be taken out long. And obviously you have your Apple, you have your Baidu, you have your Priceline, you have your Google. Those have been like the best high beta names, okay? And then on the other side, Amazon, Netflix, little faulty. They both pulled in more than they should, and they weren't on that strong list, okay? But then you also had on that strong list LVS. You also had MasterCard, Visa, some retail stocks, and these were the only stocks you actually should have been long, whereas a lot of the other stocks were breaking down. And even though some of the financials were oversold, it wasn't drastic levels where you could have been a little bit like I was in JP Morgan overnight and it gave you a way to trade out of it, which I'll go over. But, that's all you can ask for. And you know what? Today, maybe it wouldn't have happened, but at least you could have sold halfway up and then got out of the way and got off the landmine. But today, these leaders not only went positive, they pushed through Thursday's highs for more cash flow, and some of them actually closed decent. So if you did the right thing, you didn't get caught with your pants down, and you actually got rewarded 3 different times. So if you look here on Apple real quick, let me do a run through. Apple, I drew this line here saying, watch this line, watch 622, 623. If we don't go below this, chances are tech's not going to sell off. And I wound up, going positive, trading through the prior high here of 640, 634, 66, and closed pretty well. I did only one little trade in Apple. It wasn't my focus because I was trying to be a bit more conservative. I missed this trade right here. Okay, this is when you had a quick move off the lows, came back, spiders went back towards the lows. This held in here. This should have been, if you were flat overnight, here's your tier 1 long. Okay, this is when you could have actually added to it. I did not trade this move at all. I waited to right around here, okay, when the stock was trying to go positive. Okay, stock couldn't really go positive, had a pull in, they couldn't press a lower. I went long here, added through the highs of the day, and I sold into this move, and that was my cash flow trade on Apple. If I was just focusing on Apple, maybe I would have done it a bit more in here, okay, and stayed with it longer because obviously I was done in here, and then I wound up continuing, but that's fine. I wasn't looking for a macro trade in Apple, I was looking for a cash flow trade. And typically the strongest stocks fill their gaps. This went up, held sideways, and continued and pressed through. And if you look at it in hindsight, all it did is come back and retest this, held, and then gave you another move. Okay, so anyway, that was Apple. Baidu also has been a strong stock, a candidate to take it home long. So if you look at the daily, the reason why, because you had a nice breakout above this 140 area, went as high as 155-ish, and we said as long as it holds 144, 145, it looks good. This doesn't look like much today, but it was a nice trade. Okay, went green, closed okay, so this still is on the go-to list. If you go back to that 5-minute chart, it actually looks very similar to Apple. Okay, here it is. Okay, it opened lower into the prior breakout, so that's why sometimes it's good to have decent, other time frames on there, because this one, you had the move from Thursday, okay, where it closed, so it came back, held this prior breakout. So if you had your 5-minute chart, 3 days up there, you could have seen that too. Just like Apple, pretty similar. Went sideways, once it started to hold this morning low, you could have added here, then it flagged, same time around Apple flagged, and then it pushed through, made highs, and then it became a little sloppier because Baidu was just a little sloppier than Apple. But here was your cash flow move, or if you took it home long, and you could have either added to it and sold it, or you could have just said, I'm going to wait, give it like 30 minutes or so, which by 10 o'clock was almost positive, you could have got out of the way. Priceline also, which I don't trade because this stock I don't have any kind of success with. This one also went out sort of strong, so it was a candidate to take it home long, and it pushed and went positive. Google, we talked about 625, 627. It doesn't look like much here, but you know what? The low is 625.29. It went as high as 635, so that's a nice cash flow trade, and it's also holding the halfway mark, after a nice move from, this little triangle type of pattern here. So as long as it stays above here, it's showing me commitment. Not like a Netflix, right? Netflix had that really nice move. So let me just magnify it real quickly here. This was when we put it on the tape around 111 again, went to 123. It really should never have gotten below 116 if it was going to be strong, and you saw dip buyers come in. No dip buyers came in. Now it's drifted all the way down to 105. So no trade. This was the macro trade from 75. Here was your red dog reversal here at 130 before the move lower. So a lot of little trades in here, but this still is not an alpha leader. This is just a trade at times. And then you switch gears to LVS. LVS has been something I've been talking about all year. Okay, from when the earnings came out, and it was the macro buy above 50-30, and then it's been a great trade and a great hold for investors. And I went out long on Thursday because even though I knew we were in a correction, LVS went out strong on that Thursday. I'm like, you know what? I got to respect the price action. So I took home some, not tier 2 or 3, because I knew we were in a little bit of a correction. We had a job number coming out on Friday. Be a little careful. So today, there were like 3 trades in LVS. You had it down $1, So what you do is on a down day, you look to the strongest stocks, and you could have bought some in the hole for a negative to positive move. Then it traded through that, 58.76 pivot if I know in my head, and then it traded through the 59.80 pivot, and then went as high as 60.80. So there were 3 buyable patterns here or time frames, and they all kind of combined, and then you could have sold it when you wanted to and taken your trades. And if you look at the chart of LVS, like unbelievable move right here. That's really, really strong. Okay, and these are why this was the pivot that I just talked about. 58.86, I was off by 10 cents. And then this pivot here of 59.85, and it closed pretty well, pretty strong. You look at the 3-minute chart, it went really quick, guys. Okay, and if you were prepared with it, it also, look at this, it opened down, quickly moved up, went a little sideways. So even if you didn't buy it in the hole, okay, you could have bought it right here. Okay, and if you didn't buy it right here, look how tight this little flag was into 10 o'clock. It held there perfectly. I remember tweeting saying LVS is only down 30 cents. Looks good. Okay, and then obviously this was that first pivot that I just talked to you about. It traded over it, came back, couldn't get back below, and then there you go. Pick and choose, take your trades along the way depending on your time frame, but it wound up being a really nice trade all the way almost to 61. So here is your open hole. And even if you said, you know what, guys, I don't like the market. I was in it Thursday, and let me just salvage a trade. It was strong Thursday. Let you salvage a trade today. And even if you were risk averse and you didn't take it out Thursday because you're like, I'm going to be flat over this weekend, you came in today with your set of rules saying, I'm going to look to the strongest stocks, the best in breed. LVS is one of them. You didn't have to have anything overnight to make money. You actually would have been in a better frame of mind. Then you go to the same chart pattern, and you could have used, at this chart, if you go to it, my friend, you will see that all you had to do is wait for this little setup, and it was buyable right there. Or if you missed this, when you saw some things going green, it was buyable right here, and it pushed all the way up to here very quickly. This was your cash flow for the morning, if that's all you trade for, depending on your risk set. So anyway, LVS was good. So, I'm going to go over the JP Morgan strategy again that I did this morning, because in the Red Dog discussion, I talked about the setup on Thursday, which was similar to today, where you had stock that was a bit oversold, and I traded it into a support level on a macro basis, and then I added through a morning pivot, for strength, and then I was able to sell some and then hold some. Nice little strategy as we're in a market correction, and here it is with JP Morgan. Definitely been weakening somewhat. We'll go to the daily chart first. The reason why I drew this nice little line here was because this was my point of reference right here, 42.93, and this high here was 43.73. So my zone I put in my morning note, I said JP Morgan should be buyable 42.93 to about 43.30. That's why I bought some, and you saw it on my virtual floor. I talked about adding at 43.10. That was my add. So I was long overnight, added a 43.10. Then you go back to your 3-minute bar here, okay, and then this was somewhat of the opening pivot, right here, okay, and then, it came down, it came up, it couldn't get through, it held higher, and then this is when I added to it right around here. There was a down move in the S&P, and I said, wow, JP Morgan just got a little stronger, added right here, and then you had a nice clean move to 43.80. Doesn't look like much, but 30 cents JP Morgan is a decent percentage. And then it flagged, you could have just held it, and then it went as high as 44.30, which what did it do? It almost filled the gap. So nice cash flow trade. Here was your first move. If you didn't trust it, fine. Held higher, couldn't get through, held higher. There was your trade through. You could have added, taken off some here, and then all of a sudden, oh, look, it's flagging. Let me get back more. If it gets above the high of the day here, this trade was even quicker, okay? And then obviously this is where it went to as it traded through this morning high. And then I'm back to what I had overnight, and I made money buying it here. Actually, no, I'm buying it here, sorry. This was just because I was prepared, and that's what traders need to be, is prepared. And then adding here, sold some here. And then I didn't get back into more because I was leaving. I had to take care of some business today. And I just held some. And then I got back around, 2:30. I saw it around here, sold a little bit more. And then on the close, it came back in. I took a little bit more. So I'm in a little bit more than I had on Thursday night, but obviously a lot less than I had intraday today, and that's how you trade for cash flow and try and see where these things could hold. And that's what I'm doing right now. I'm trading for cash flow. I'm trying to maneuver the ranges and the technical points based on the price action of the leaders as well as the points of reference that I have mapped out and combine that with the headlines. Don't make it too difficult. You know, a lot of guys are saying S&P 1100, S&P 1200. Some guys are saying today's the low. I'm not saying anything. I'm saying I want to see more data from the market, and I'm going to maneuver the ranges with my skill set and my set of rules that I follow that have proved prudent over the course of time. So as of right now, I think I have like 4 positions. I have a spider hedge. I'm a little bit more net long today than I was Thursday. And either way, I think I could trade around my positions. I'm not caught in that 40 handle pull. And actually, on the highs of my year as a trader, we all love to be on the highs of your year as a trader, which with a bullish thesis from December 20th. So it shows you how you could time and switch gears. I'm not trying to chess beat. I'm just trying to show you that you could do it. You take the time, you educate yourself, you watch our service, you look at our affiliates, you listen to our radio, you listen to other commentators, and you can be safe in this market and profitable, and you could keep moving in the right direction. Scott Redler, T3 Live, the recap. See you at the morning call. Have a good night.